So compliance. So compliance is basically all the things that you're required to do to comply with the law. So just looking at the Australian Tax Office and tax, as a sole trader, you actually have to complete a different part of a personal income tax return that has business income and business expenses on it. So you need to track those. Some people will start tracking them in Excel when they're a sole trader. Some people will actually start using some accounting software like Xero or MYOB or something. But generally, at sole trader, it's fairly easy to track because there's a small number of transactions. I will just mention, if you are a sole trader, there is a special tax break or tax benefit or possible tax benefit called income averaging, which is actually this great thing that somebody came up with, which is they sort of recognize that quite often people in the creative industries have a very sort of lumpy income. Like they might get $30,000 a year for 3 or 4 years and then get a feature film up and earn $300,000 in a year. And so what the ATO has developed a system called income averaging. Instead of paying tax on that 300,000 in that 1 year, they actually say, oh, let's average that over the last 5 years. And if you did that equally over the last 5 years, how much tax would they pay? So that is one of the advantages of sole trader, is you do get access to income averaging. It's a fairly complicated area. I'd recommend speaking to a tax accountant if you're interested in income averaging. But it's just worth mentioning that there is this great tax benefit available to sole traders. Tax for companies. As I mentioned, companies are required to keep a separate set of accounts. And I'll just mention here, like running a company will generally cost $3,000 to $4,000 a year on average. So it's not, if you're very early on, that's one of the decisions on whether you start being a company or not. If you're a company, you really need to have accounting software. Most of our clients, like 98% of our clients, use Xero, X-E-R-O. It's very user-friendly. It's a cloud-based system. It works for film. So, but other people use MYOB or QuickBooks are the other two that I've seen. But like I said, 98% are on Xero. And that, Xero might cost you $50 or $60 a month. So there's $500 or $600. If you're a company, you've got to pay an annual ASIC fee, which is about $280, and that's just paid to ASIC every year. If you're a company, you might have a bookkeeper. You might do your own books in Xero, or you might have a bookkeeper coming in once a month. You might pay, somebody $200 a month to do your books, and then you've got to do a company tax return, which is 30th of June. You tell the ATO that your income and expenses. And if you're profitable, then you pay tax at the company rate, which is around 25% at the moment. But again, if you're paying somebody to do a company tax return, that might be another $1,500. So once you look at your software, your ASIC, your bookkeeper, your company tax return, it can be $3,000 or $4,000. So that's one of the things you think about the timing of starting to set the company. Are you going to have enough income to cover that overhead? I will cover this later on, but I generally find most companies don't have huge profits, just the way film is structured. So, but I'll cover that a little bit more later on. ASIC, the Australian Securities and Investment Commission. One of the things worth mentioning is if you are a director of a company, you do have certain responsibilities. The main responsibility is not trading while insolvent. What that means is if you go to a supplier and go, okay, I want to engage your services, and you can't pay them, that's basically trading while insolvent. It's basically taking on new debt or new obligations to suppliers when you don't have enough money to pay for them. So it's like, going to a script writer and going, okay, I'm going to pay you $10,000 to do another version of script when you don't have $10,000. That's trading while insolvent. Trading while insolvent is very bad because basically ASIC or the supplier can actually, if you're trading while insolvent, they can then actually come after your personal assets to satisfy that debt. So it actually removes one of the main advantages of the company, which is that it's a separate legal entity, and there's that separation of its assets and liabilities from your personal assets and liabilities. There are also directors' responsibilities around paying superannuation, paying GST, and paying some of the tax debts. And again, if you're not paying your super, they can come after your personal assets. So basically, there are responsibilities on being a director of a company, and they're sort of the main ones that are likely to impact you in filmmaking. The other one, which I see catches a lot of people up, is if you're a company, you have to notify ASIC of your registered place of business, your main place of business, your directors' names, your directors' addresses, your shareholders' names, your shareholders' addresses. And basically, if you move and you've got a company, you've got to tell ASIC within 28 days that you have a new address, whether the company moves or whether you move personally or whether one of your shareholders moves. Now, the thing is, if you don't notify ASIC have a system where they penalize you very highly. So you might end up paying, $200 if you're late for notifying them, or if you don't notify them for 6 months, they might fine you $1,000 for late notification. It's also worth noting that ASIC invoice, which I mentioned, they also have really high penalties if you're late paying that. So like the first month you're late, it's $80. Then the second month you're late, it's another $200. Then the third month, it's another $300. So if you don't pay that invoice of $300 for 3 months, suddenly you're looking at fines of like $580. So you've always got to pay your ASIC invoices straight away. And if you're moved and not told ASIC where your new address is, they'll send the statement to your old address and you won't see it for 3 months, and then suddenly you're paying $600 in fees. I will just mention quickly, you can appoint somebody like us as an ASIC agent, and then we get all the correspondence. So if you are a producer who moves around a lot, and we've got a couple of those, then they can actually get the correspondence sent to us and that sort of thing. So it's worth talking to your accountant about being an ASIC agent. Superannuation. So obviously, when you have employees, you're required to pay superannuation. The superannuation rate is generally 10%, but there are some award rates that will modify that for cast and crew on projects. But yeah, if you just like have a office manager or somebody in your production company, and you're paying them, $1,000 a month, then obviously you're going to have to pay $100 super every month. Super is generally payable within 28 days of the end of a quarter. So you're generally paying super 4 times a year. And there are systems basically that you don't pay the super fund directly because it all has to be registered electronically. And there's legislation about that. So you can either pay through the ATO. The ATO has a portal you can pay super, or Australian Super has a product called Quick Super, where you can go online and set up payments, or Xero even actually has a function where you can pay super through Xero, which makes it really easy as well. But basically, there has to be an electronic system where you're paying a super clearinghouse, and that clearinghouse then pays all the supers, which actually makes it a lot easier because you just do one payment to the clearinghouse and they then pay all the other super funds directly. Super and contractors. Yes, you do have to pay superannuation for your contractors. There is a specific part of legislation in superannuation which says basically if you work in media and entertainment as a contractor, you get superannuation, you are due superannuation. So the whole agreement of are you a contractor or not a contractor is a bit of a moot point for filmmakers. And not everybody realizes this, because if somebody's a genuine contractor, normally you may not have to pay super for them. But within film industry, yes, you need to make sure you are putting in super into your budgets for all your contractors and paying super for all your contractors. I know industry awards have been covered separately, but yeah, just mentioning there are slightly different super rates for cast and crew in the awards. One of the awards, it's written in at 10.5%. One of the awards, it's written in as a current rate plus 1%, so it's 11%. So if you are in a production, that's an award production, you do need to be looking at the industry award rates.